The Dallas housing market just hit a wall. Nearly 29,000 homes are sitting unsold across the metro, the highest in more than a decade. Inventory is up 37% to 66% compared to last year, depending on location. The median price is slipping, down as much as 5.3% year over year. Homes are taking 2 weeks longer to sell than they did in 2024. If you're buying, selling, or investing, the next 12 months could decide whether you gain or lose big in 2026. Let's break down what's really happening in Dallas. I'm Adam, and this is Deep Research Real Estate, where we cut through the hype and focus on the data. Here's what we'll cover: why Dallas inventory exploded, how prices and days on market are shifting, why new construction oversupply is shaking the market, and a simple playbook for buyers and sellers heading into 2026. Let's start with inventory, the number that changes everything. Across the Dallas-Fort Worth metro, there are 29,000 active listings. That's the highest level in more than 10 years. Inventory is up 37% in some counties and as high as 66% in certain price ranges. In 2021, Dallas averaged 10 to 12,000 listings. By 2024, that climbed to the low 20,000s. Now, as we move through late 2025, it's pushing past 29,000. This isn't seasonal. It's a supply surge meeting weaker demand. And when that happens, sellers lose pricing power. So what's happening to prices? The median home price sits between $399,000 and $425,000. That's down 1 to 5% year over year. Earlier in 2024, prices were still rising. By the end of 2025, those gains are gone. Dallas is in the who blinks first phase. Buyers waiting, sellers holding firm. This is late cycle behavior. Prices stretched affordability, inventory piled up, and now correction mode begins. Next, days on market. The median time to sell is now 57 to 64 days. Last year, it was closer to 44 to 50. That's 2 extra weeks for most listings. Buyers are more selective. Listings linger longer. Urgency is gone. In 2021, homes sold in days. By late 2025, time favors buyers, and that trend could deepen into 2026. Here's what makes Dallas unique: new construction oversupply. In 2024, builders delivered about 40,000 new homes. That's double the pre-pandemic average. Add in elevated mortgage rates and softer demand, and pressure builds fast. Builders are competing with each other and resale sellers for fewer buyers. They're offering rate buydowns, closing credits, and free upgrades to move inventory. For buyers, that's leverage. For sellers, that's tough competition. Now, let's talk price cuts. With inventory up, days on market rising, and builders offering deals, price reductions are spreading. In comparable markets like Riverside, 1 in 4 listings cuts price at least once. Dallas is tracking in that same range. When 1 in 4 sellers drops price, it's not a seller's market. It's a market under stress. How did Dallas, one of America's hottest markets, get here? 4 forces collided. Corporate relocations brought over 100 companies to the area between 2018 and 2024. Builders went all in, adding record housing supply. Mortgage rates spiked, crushing affordability, and demand growth slowed as relocations cooled and buyers faced sticker shock. The result? A market that looks strong on paper, but feels weaker with each passing quarter. What happens next? 3 possible paths into 2026. Scenario 1, the slow grind. Inventory stays high, price cuts continue, and real selling prices drift down 10 to 20% by late 2026. Scenario 2, rate relief. If mortgage rates finally drop near 5%, demand returns, but buyers remain cautious. Scenario 3, builder panic. Oversupply triggers deep builder discounts that drag resale prices down with them. Based on data today, record inventory, rising days on market, and softening demand, Dallas is trending scenario 1, leaning toward scenario 3. The late 2025-2026 buyer playbook. You finally have leverage. Target stale listings. 45, 60, 90 days or more on the market. Play builders against each other to maximize incentives. Negotiate aggressively on resale homes. Price, credits, repairs, concessions. Don't rush. 29,000 listings means options. Focus on your monthly payment, not the perfect price. Ask yourself, if prices fell another 10%, would I still be comfortable with this payment? If yes, you're buying smart. For sellers and investors, the strategy flips. Price for the market you're in, not the one you remember. Use the last 30 to 60 days of closed sales for comps. Win on presentation. Clean, updated, staged homes attract serious buyers. And remember, buyers have time and choices. In 2021, sellers controlled the clock. By 2026, the clock controls sellers. Dallas isn't collapsing overnight, but the shift is real and it's accelerating. Stay sharp, stay informed, and don't let headlines write your financial story. I'm Adam, and this is Deep Research Real Estate. We'll see you in the next one.